Well, welcome back, everybody. Look, great to, so far we've given a context how corporates and why corporates are investing. The next panel, which Kenny Lee, our Managing Director of our Singapore office, is going to run, is going to dive down into why institutions, family offices and other allocators are investing into digital assets. Kenny, over to you.
Hey, welcome back, everyone, to our first panel of the day. My name is Kenny Lee. I lead strategic initiatives at OSL. And today we'll get to the bottom of the growing institutional demand for digital assets and how experts who work with OSL are navigating this asset class. If you're still deciding between the red or blue pill, this is the panel for you. Let's jump right into it. A warm welcome to my panelists, and we'll perhaps start going around to each of you for an introduction, starting with those who's furthest away. Matt Stover, CEO of MG Stover. Perhaps, Matt, you can introduce yourself at MG Stover and share what sort of demand you're seeing from your part of the market.
Yeah, sure. Thanks, Kenny. Thanks for having me. So my name is Matt Stover. I'm the founder and CEO of MG Stover. We are a fund accounting and administration firm catering to the private fund space. Our clients are hedge funds, private equity, venture capital, real estate, oil and gas. As Kenny mentioned, we are dedicated to the cryptocurrency space. We're the largest fund administrator with over 140 dedicated crypto funds and north of 8 billion of assets under administration. This year has been, there's been a lot of demand. We've been servicing crypto funds since 2014, and kind of the price of especially Bitcoin and the wave of interest from investors has definitely kind of gone up and down. This year has been very similar to kind of late 2017 and early 2018, where there's prices go up and fund managers want to launch, as well as investors wanting to get into the space. And over the last 7 years, when we've been servicing these funds, there's been a dramatic shift from the long-only fundamental fund managers to and with more retail driven, and definitely a shift from retail investors to much more institutional. And the strategies that we're seeing, it's not just long only. We see fundamental value plays. We see a lot of high frequency quantitative strategies. There's staking, mining, DeFi has been very hot. So you name it, we've kind of seen it over the course of the years. But the demand from institutional investors this year more than any other year has been very exciting for us and kind of the ecosystem, because it's driving a lot of the fund formation, and just there's been a various of different outlets for investors to be able to invest in digital assets outside of just holding single coins.
Great. Maybe let's segue into some of maybe the more infamous funds in the U.S. The Grayscale Trust. It's sitting at 38 billion assets under management, and it's growing like an unstoppable train. Do you think it'll continue to dominate, or do we start juggling razor blades, like Michael said?
Well, I mean, Grayscale's got a very unique offering where it's one of the few products that you can buy through a traditional brokerage firm. The SEC has not approved an ETF. Canadian ETF just got launched the last month. So we'll see more products come for retail investors. So I do think that Grayscale will continue its dominance just because it was one of the first and it's the most well known. There will be other products that come to market. I do think that we will see a continuous expansion of the private fund space, and that's where we see most of the growth and a lot of the money going. Outside of we see investments going to Grayscale and other retail products, but we see a lot more in the private fund space expanding over the course of the next year, just because it's not just a single asset directional play. There's multiple strategies that are being deployed on the private fund space side.
Interesting. Another news clip from the U.S. A $1.9 trillion coronavirus stimulus package was just passed by the U.S. Senate, larger than the market cap of all cryptocurrencies combined. What's more worrying, a crypto bubble, or are we talking about fiat inflation here?
Well, it's interesting that when you compare those numbers, it's us, that are located in the U.S. It seems like we continuously print money every time there's problems. And the store value concept, especially with the limited supply of Bitcoin and other coins, is very attractive. There is definitely market risk. I think where we're seeing more interest from investors going into our crypto funds is, maybe it's store value, inflation risk, market risk. I think a bigger, pocket that we see interest is this is a new, evolving technology, very much like the internet in the early days of the internet, where it's going to change our everyday life. How it's going to change our everyday life, no one necessarily knows for sure, but they know that it's exciting space. There's so many different reasons why they're investing. Inflation is one of them. Market risk is another. I think that the technology and the use cases is another part that they're looking at. So all of those combined is kind of why people they're excited to at least learn more and potentially make an allocation, even if it is a small percentage of their net worth.
And Matt, you mentioned some of the private funds. What are the sort of the private funds that you're seeing?
Well, the early days, so we started servicing crypto funds in 2014. They were mostly only, they only could be long spot, kind of fundamental, strategies. Most of the fund managers came from the computer science industry, so they really understood the blockchain protocols and which platforms they wanted to invest in. Today, people can be long or short. We still see a lot of fundamental strategies because they're very much directional into certain platforms. But we also see a lot of high trading strategies, very quantitative, high frequency trading. There's yield strategies that we're seeing coming to market. On the closed end side, we see mining or DeFi has been very popular with yield farming over the last 6 to 9 months. So it really kind of depends. And what's been exciting about crypto and the digital assets is it's not just a very directional play like Bitcoin or Ethereum. There are those products to market, and there's other, you can buy it yourself, but there's experts in the industry that really know how to trade around the market volatility. There's hedging opportunities that they're deploying. There's risk management. A lot of these funds, it's very institutional. It's come a long way since we started over the last 7 years. From not just the portfolio strategy, but the service providers in the space and the best practices around operating a fund. So investors are feeling a lot more safe in their investments in these funds, but there are also a variety of strategies that they can invest in, which is pretty exciting.
Yeah, certainly we're seeing also diversified demand. Maybe perhaps let's segue over to Jeff, who's also based in the U.S., Jeff Smith, Senior Managing Director of EquitiesFirst Holdings. Jeff, perhaps you can introduce yourself and EFH.
Sure, happy to. Thank you, Kenny. Let me thank OSL also. This is a fantastic conference so far, so congrats. EquitiesFirst, we're an asset-backed lender founded in 2002, licensed and regulated, now operating out of 12 offices in 8 different jurisdictions. And in the first 15 years of EFH, we transacted primarily with publicly traded equities with our non-recourse transaction. And the way that our transaction is structured is that the borrower is looking for liquidity at attractive terms, but they want to retain all their ownership beneficial interests in regard to dividends and the upside market appreciation. And over the last 5 years, there's been a tremendous surge in our business in the crypto back, depending on the need and the investment that the institution or the high net worth individual is looking for. And what drew it to us, where the market came to us, was there was a real void for the larger loans, or they were looking for loans in the area between 1 and 25 million. And that fit us like a glove because we're institutional, we're not retail. So where we stepped in and started making the loans in the $5, $10, $20 million range, and the institutions that borrowed, they often took the money and put it right back into their business. It helped them run their business, it helped them get into new business ventures, sometimes even bought more crypto. With the high net worth individuals, a lot of times it was diversification in their portfolio. Sometimes, again, it was to buy more crypto, but they wanted to retain that asset as far as the upside market appreciation. And that's what our transaction allows them to do. So, like I said, it's been just a tremendous growth. For example, in 2020, we actually did 5 times the amount of crypto-backed loans than we did in 2019. In 2021 looks like it's going to be the same sort of growth. So it represents a nice part of our portfolio now. It's still a minority interest. It's about 15% of our total portfolio, but we really like the diversification, so we're dedicated to it. We'll probably grow that percentage over time to 20 or 25% of our portfolio, and we're just super excited about the growth. So we got into it in a big way about 5 years ago, and we're going to be making crypto-backed loans for many years to go.
That's fantastic, and also great to hear. Certainly, no one's looking to sell in this type of environment, and retaining their crypto assets in a low-interest environment makes perfect sense. Jeff, maybe you could talk a little bit about some of the emerging demand. You mentioned a 5x since last year, but is that 5x coming from U.S.-based professional investors, or do you see more demand coming from Europe and Asia?
Yeah, it's very interesting. It's come from the U.S., Europe, and Asia so far, primarily. Just recently, some from Canada as well, so that's interesting. But I would say so far, the largest has come from Europe, the number of transactions, then the U.S., and then Asia. But Asia is quickly catching up. So if you asked me where I think the growth, and as far as the positive curve going up, I think beginning now, 2021, 2022, the greater growth is going to come out of Asia.
Maybe just talk a little bit about the low interest rate environment. Michael earlier mentioned about continuous borrowing up to $1 billion amidst this low interest rate environment. It's highly leveraged into a position on Bitcoin. But what happens when the markets change direction inevitably? Interest rates goes up or Bitcoin goes down.
Yeah, we're at EquitiesFirst. We have a real advantage because we're non-levered. We're making our loans with our own capital, so we're really not tied to the overall LIBOR and other interest rates that are driven in the market. And so we're putting our capital to work. We're investing where we think we're getting the best return for our dollars. And we really like this space. So we can move very quickly with our own capital, because very often an institution will come to us and they're looking to access liquidity against their holdings, and they'd like to get that loan funded within a week or within a few days. And we can accommodate that because it's our own capital. We can move. We're transacting every week now with a crypto loan. And with an individual, we had an individual a few weeks ago that needed $12.5 million for a new business venture. But they had a deadline with that business venture, and it was about a week and a half out. We accommodated that individual, a high net worth individual, where we closed that loan in a week. So we're not so much driven by, I'll say, external interest rates, but what we do see, again, where the USD and the crypto are absolutely working hand in hand, depending on the need and the opportunity. And that's why we're very cash rich, which is great. And we like bringing crypto into our portfolio because we view it as a really good hedge and diversification against our equity portfolio.
Yeah. So Jeff, you mentioned sometimes for institutional investors, it might take anywhere from a few days to get a loan, but sometimes in the crypto markets, where we work in crypto speed, some of the lending platforms out in the market, you might have heard recently BlockFi, which is valued at $3 billion with the recent raise. Maybe you can highlight some of the differences between an on-platform borrow versus a borrow through EFH.
Understand. Well, again, our field that we play in, we're not a retail player. Our minimum loan size is basically $1 million. We like the larger ones, 5, 10, 15, 20 sort of million. So that's more of a big chunk of cash that a business is using. And they may be using that cash to make smaller loans to retail players, because that's the field that they play in. And that's great if they're creating that arbitrage opportunity, if you will. But what sets us apart is the ability to move quickly for a $25 million loan or a $50 million loan. That's that sort of thing. So, and then we'll leave it to some of the other players out there of they're doing, say, a $5,000 or a $10,000 sort of loan.
And certainly that makes sense. All right, maybe let's segue over to where the demand is in Asia. Harmen Overdijk, founder of the Capital Company. Harmen, perhaps you can introduce yourself and perhaps also what the Capital Company is.
Yeah, thank you, Kenny. So yeah, the Capital Company is more traditional, based in the US, in New York and Dallas. We help wealthy individuals, initially mostly with their tax structuring, their estate planning, which is actually very relevant in regard to the crypto boom we are seeing at the moment. And next to that, we help clients with investments. The majority of what we do is the more traditional investment space, but we clearly see a shift among our high net worth clients in interest in cryptocurrencies. Interestingly enough, I had a call with a client yesterday who's 86 years old, and he wanted to know how he can invest in Bitcoin. But we see it across the board that more and more of our clients come to us and say, actually, I bought crypto already years ago and I have this wallet of crypto. What shall I do with it? So the interest is definitely there. But what we see is really a big shift that's happening is the interest is increasing because cryptocurrencies become more regulated. The intermediaries like OSL become regulated. Because that's still the key thing that's holding people back, that they still don't totally understand in the first place, and with that don't trust how to invest in the crypto space. At the same time, the beauty about being regulated is that it becomes more clear, and that cryptocurrencies like Bitcoin can scale up to much higher levels, as we've seen over the last couple of years. But with that, with regulations also come obligations. In many countries, notably in the US, but also most European investments in cryptocurrencies from a tax perspective. So in the US, for example, if you're an individual investor in cryptocurrencies, it's considered forex trading or currency trading, which makes sense. But it also means that you either need to add any gains to your income, meaning you have to pay personal income tax, or you can opt for 60% short-term, 40% long-term capital gain. But that still means that every year you will have to pay about 30% of your gains to the IRD. Sorry, to the IRS in the US. Same thing's happening in Europe. They made it very clear. If there's a capital gains tax, you have to pay capital gains tax every year. If you need to add it to your wealth, certain countries in Europe have a wealth tax. You have to pay your wealth tax on that. And interestingly enough, what we see is that the crypto space has developed so quickly over the last 7 years. A lot of the original crypto investors went into Bitcoin and other cryptocurrencies because they wanted to create a currency to be out of the system and to be independent of governments. The thing is, and Michael Saylor mentioned it before, and I totally agree with that, crypto is not a currency. It will never be a currency anymore. It has become a store of value and will remain a store of value. He called it a property, which means as long as it's regulated, governments will tax it. And they will likely tax it more in the coming years. And that's one area where we at this moment help a lot of the families with, because they didn't consider it so much. In some cases, they bought Bitcoin 8 years ago, 9 years ago, and they didn't consider it such a valuable asset, but has become one. One of our partners, who also happens to be a tax attorney, actually was one of the early Bitcoin area we're dealing with clients. So you're lucky if you live in Hong Kong or Singapore or a place like Monaco that doesn't tax wealth or capital gains. Then a lot of other places that is the case, and people need to sort it out. And the other big thing that we're seeing now is because it becomes such a valuable asset, a lot of people haven't properly thought about it, how to incorporate it into their estate planning. So what if something happens to you? A lot of Bitcoin is getting lost when people pass away. either because they haven't shared their passwords with their loved ones, or they haven't properly included it in their wills or in their estate planning. Because again, now that it's regulated, it's part of the tax net as well. So your crypto will be considered by governments as part of your estate, and in most countries that's taxed as well. And especially if your partner or your children don't know how to deal with that and don't know how even to trade it, it creates issues, it creates problems. And that is actually what we are helping our clients mostly with at this moment. And the other part, as I said, we are coming from the more traditional investment angle. What we also see is that people who have no investment experience other than investing in crypto became very wealthy and are now looking for a way to effectively diversify their investment strategy for the longer term. So it's quite an interesting angle, and yes, I totally agree. The number of questions about this probably increased tenfold or more over the last 18 months. We are investing in our portfolios in Bitcoin, and only in Bitcoin, for that same reason that Michael Saylor does. We see it as a store of value, and it's one of the real assets in a way that you want to have part of your balanced global portfolio. So since we also started about in May last year, including that in our clients' portfolios. Obviously in the short term that works well, but we really see that as a long-term store of value. And that will continue to grow. So there's definitely a lot of support for Bitcoin as a store of value. I'm more excited longer term about the promise that blockchain brings with it, and the way blockchain technology can disrupt the whole intermediary system. And I think what I see from a family office perspective, large family offices are particularly interested in that angle, to be honest.
Harmen, thanks for that deep overview into generational wealth conversations that you're having over there. Perhaps let's take it over down to Singapore, to Steve. Steve Knabl, CEO of Swiss Asia, based here in Singapore. Steve, maybe you could share a little bit about yourself, Swiss Asia, and what you're seeing here in Singapore.
Sure. Hi. So yeah, we're actually a hedge fund platform. Again, what we do is actually we help hedge fund managers set up their own hedge funds and then manage them, and we actually put the whole ecosystem together for them, so that they can be not only under a very clear regulatory umbrella, but also being able to manage all the operational aspects of their hedge funds. And so we have about 43 funds on our platform today, and $3.5 billion of assets under management. And out of these 43 funds, we have a few crypto managers that have set up over the past few years. So we started with the first one in 2016, and we've actually seen quite a substantial increase. People, of course, having invested early stage in crypto, younger generation managers have made quite a substantial amount of money because of the increase in value of the cryptocurrencies, as well as, for example, DeFi and all the other peripheral types of investment strategies that were based around the crypto asset class. Okay, so we're seeing a pretty substantial growth as well in the inflows into these funds, and a large interest in not only the I would say the long only type managers or the tracker type managers, but also into the more absolute return or quantitative strategies, vol trading strategies around this asset class, because there's a lot of opportunities in the asset class other than just the holding the store of value of the actual underlying Bitcoin, for example. Okay.
Thanks for that, Steve. We talked a little bit about the success that Grayscale has had in the US, and obviously we get a lot of inquiries about starting up the Grayscale of Asia. If someone was interested in doing that, would they contact you?
Well, for example, yeah, they could. Right. But again, my advice would not probably be to try and replicate what Grayscale is doing. I think Grayscale has a unique proposition to a certain extent, right? But there's a lot of costs associated to managing a fund, and unless you can actually sell it at a very large premium like Grayscale does, then it's not going to be an easy sell. All right. More and more people today know how to buy Bitcoin or buy the actual digital currency on the different exchanges. Okay, so I think that being able to propose, look, I can give you buy my ETF, and then you'll have access. There's no reason for me to anymore to actually go via a tracker type trust or whatever. That being said, we're seeing more and more ETFs being launched as structured products and being listed on different exchanges. I mean, we've got a few that are in at least one or two, if I'm not mistaken, on the Swiss exchange already, in Canada. We're going to see some in Asia very, very soon. I'm convinced it's just something that's going to happen. So coming to, setting up a Cayman structure just to buy and hold Bitcoin, I don't know, it's questionable.
Yeah, so certainly there's a lot of ambition. Obviously, everyone's looking at the dominating force and seeing what can be replicated here, especially with the retirement savings here.
Yep.
Let's talk a little bit more about what's happening in Asia. The Chinese app Meitu just purchased 40 million Bitcoin and Ethereum as part of the treasury holdings, maybe emulating what Michael's doing, at a smaller scale, but maybe perhaps to look to lever up. What if they did in a fund, or do you expect maybe more Asian companies to follow suit?
I think so. Again, I mean, it goes along the line of the discussion we've been having today. Digital currencies are becoming an asset class of their own. Okay, so it's an asset class with many different components in it. So you need to understand each and every one of the components, how each and every one of those components will work over the longer term, and basically these companies are going to continue buying it as a diversification of their own of their capital. It's been many years that we've seen cash-rich companies buy different types of assets, make investments, etc., make a lot of money on it. So I think, and now what we're seeing is a normal trend of all these companies getting into the digital currency space. And I think, Elon Musk is a forward thinker and a trendsetter. So people will follow suit. People will understand it, and more we're going to see more and more this becoming mainstream as a general rule, I think.
Yeah, I think everyone's looking to become the techno king of their company as well.
Yeah.
All right, I think let's start taking some questions from the audience. Those in the audience, if you want to ask some questions, please type them into the questions panel. And perhaps maybe I'll start off with a discussion on DeFi. The total value locked of DeFi is now sitting at 42 billion, which is more than double since January. Do we all see this as a serious challenger to the financial system, or do we have a career or future as a yield farmer? What do you all think?
I think it will be a challenger to the financial system, but it will be a long way before central banks and governments will allow it. I think governments want to keep control of their monetary policy in the long term. They don't have an interest or a geopolitical or national interest to let it get out of their hands. So if it becomes too big, it will be regulated to an extent that it will be controlled again by governments, unless you believe that it will be bigger than that. But that's going to be the big challenge. I believe DeFi will play an important role in changing the way intermediaries deal with financial transactions. But that's a different way of looking at it.
Yeah, certainly we've seen a little bit of that in the Indian government looking to ban cryptocurrencies. Imagine trying to ban a decentralized exchange and decentralized transactions. Sorry, Matt or Jeff, were you?
Yeah, one thing I was going to say is, of our managers, there's a lot of interest in trading DeFi. They do think that there's a lot of opportunity in trading in that space, as well as kind of future value. For us, there's a big challenge of just kind of the accounting and reporting on those types of transactions, because sometimes we're not privy to getting access of information on the liquidity pool. So that's been a challenge from just a reporting and valuation standpoint. But from an interest standpoint, there's been a tremendous amount of interest for our fund managers to trade in that space.
Yeah, I can see what the challenges are trying to pull off a decentralized transaction, trying to audit a liquidity pool, for example. Must be interesting for you, or interesting work for you.
Yeah, I mean, that's just kind of how the whole digital asset space has evolved. The first time the fork happened, we had to consult with, accountants and, both auditors and tax preparers on how to, handle the cost basis transfer. This first time there was, staking and mining, how do you account for this? Everything's kind of rapidly growing. The ecosystem's moving faster than a lot of times we can build solutions for it. So it's really smart to make sure that you're collaborating with various different counterparties to make sure that you've got the best practice. Crypto craze, but I definitely think that it's not going to kind of go away. I think it's just going to get bigger from here. Yeah.
Yesterday there was a big launch of a DeFi token on the Solana chain called Oxygen, and it was quite interesting. It's looking to do DeFi or prime brokerage on a coin. Maybe any thoughts about that? Do you think it's going to take over? It's going to render us obsolete, or will we continue to have a role in the lending space?
I'll jump in. Our investors so far that have come to us, they're longer term in nature, 1, 2, and 3 years out. And almost all of our transactions have been with Bitcoin and Ethereum to date. As some of these other coins or tokens that increase in their market cap and become more accepted, if you will, we'll be taking a look at that. But for now, we're pretty much just focused on Bitcoin and Ethereum being the two with our longer term investors.
Right. Maybe let's segue over to the emerging world of non-fungible tokens, NFTs. It's been a very hot market in the last couple of weeks. Trophy art, I think that term was coined from Michael's earlier fireside chat. And recently, a mysterious investor named Metakovan, I think I'm pronouncing that correctly, just purchased an NFT for almost 70 million and claims to have the largest NFT fund in the world, Metaverse, based right here in Singapore. Do any of you know who Metakovan is, and what's happening in this crazy world of NFTs?
I don't know who he is, but I have a view on it. I think NFTs and the way it was used in this specific transaction, so the piece of art that he bought, is a different medium, and especially in art, artists are always looking for different medium. And I can see if you can create a non-fungible token, that it can act as an art piece, and that you can have it as a digital piece that you can project on your TV wherever you go. You can take a piece of art with you to every hotel room you go to and look at it. And in this case, $70 million is a lot of money. But this was a proper piece of art. An artist worked 13 years of it, and if you look at it and what he created, that was actually quite unique. I think it would be worthy for any museum. Doesn't mean that every piece of art is going to be valuable. Just like there are some really valuable pieces of modern art out there, but again, there are also millions of paintings out there that are nice, maybe nice and colorful on the wall, but not particularly valuable. And that will be the same thing with NFTs. So if you just want to jump in as an investment, you might get disappointed from time to time, like you're buying actually. But that's an interesting way. It's a different way to look at art. It's a different medium. You could also look what certain tokens are trying to do is tokenize existing art, meaning the more traditional art, and break it up in digital tokens. I think the NFT is a more interesting way to look at art and to own it.
Certainly, at least you can look at your NFT, but you can't look at your Bitcoin, or maybe just the wallet. We're just about winding down now. We have a few questions left from the audience, and maybe we'll start taking some questions from there. One's directed for you, Matt, about crypto being still young, a lot of downside, and as a fund administrator, how do you prevent fraud and protect the underlying fund investors? Because it is still new for a lot of people, and they're still worried about the security about their holdings.
Yeah, and that's a really important question, and I think that's why there's so much investor demand for the private fund space that have kind of an institutional offering. I can't speak to what other administrators do, but for us, we don't do anything that's NAV light. We're not relying on anything from the client. We track every single buy, sell, deposit, withdrawal in and out of all their exchanges, custodians. We track all the OTC trades, even all their cold storage holdings. So we want to make sure that we're tracking all of this, and we had to build technology ourselves in order to pull the data independently and then price it. So, we're very confident with our process. We also have an auditor come in and audit our internal controls as part of our SOC audit. Crypto is a piece of that, but it is really important. In a lot of ways, when you build the technology, it's very easy to trace the coins and the transfers, especially when it's on chain, because you can verify that it is there. So in some ways, it's much easier to track than call it the traditional equity space. But then once it's on exchange, it's very similar to like your brokerage account. You still have to rely on information coming from that exchange, similar to a broker. But we're tracking that data, but it is in an omnibus account versus on chain. So for us, we want to make sure we're tracking every single transaction. We will not send out any NAV packages or investor statements without a complete set of records.
Yeah, that's great. It's on the blockchain. It's immutable and transparent. I love that. Maybe a question from a fund manager. Maybe Steve, you can take this. The crypto industry is still very inefficient and fragmented. 400 exchanges, always profitable arbitrage plays. Do you think this opportunity will last? Are you seeing demand for such funds, maybe in the basis trading area?
No, yeah, absolutely. I think this is one of the main advantages right now, where there's a completely fragmented market, especially for arbitrage funds, quant funds that can take advantage of all of this. But I think yes, there are 400 exchanges, but this will clearly not last forever. I think that the number of exchanges is going to reduce drastically and dramatically, and that's especially on the back of regulation. Regulators now are regulating the custodians. In Singapore, for example, now MES has decided to regulate custodians under the Payment Services Act. So they're becoming more regulated, highly regulated, which means that AML and KYC is key. For the time being, the exchanges are operating largely unregulated, and I think that the larger players will have to line up and get regulated one by one. And that being said, right now we can work around the non-regulatory aspect of all, deploying capital onto exchanges, just as private equity is, where you deploy capital in the private equity fund. But where we're really seeing a challenge is as soon as the regulators, wherever they be, start to limit what you can actually do and who you can actually deploy capital to as a regulated entity, that's when it will start getting complicated. So I think,
Yeah, you have to act fast.
Yeah.
I think we're just about out of time. So I want to thank you to all the panelists today for all your insights. I hope we all nudge everyone all closer to the red pill and get into crypto. Thank you very much.
Thank you.
Thank you.